Hello guys, welcome to my channel. So today we are going to learn the definition of accounting, the system of accounting and how to pass the journal entries. So the definition of accounts is it is the process of reporting, recording, evaluating and summarizing economic data is referred to as accounting. So by giving information on the company's financial situation. So basically accounting is a system that identifies and records business transactions so that they may be compared to those of other businesses and to the performance of the business in the past. So basically accounting is the art of recording, classifying and summarizing in a meaningful way and in terms of money transaction and events which are at least in part of financial character and interpreting the result. Okay, so the next thing is the system of accounting. So here, as you can see, there are two systems of accounting. One is the double entry system and the other is the single entry system. So in the double entry system, every transaction consists of two parts. One is a debit and a credit of the same value. So both sides of the transaction are recognized and recorded by this accounting system. So at least there are two accounts involved and there should be no deviation from the accounting equation. And the other is the single entry system. So in the single entry system, both characteristics are not captured for every transaction under this system, and also for all the transaction neither one component is recorded only or neither aspects of recorded. So here is the question to pass the journal entries. So to pass the journal entries, the basic thing that you need to learn is the rule of debit and credit. So here are the three types of account. One is the personal account, second one is the real account, and third one is the nominal account. So in the personal account, the rules for debit and credit is, so in personal account, the debit the receiver, credit the giver, and in real account, debit what comes in, credit what goes out. And for nominal account, debit all the expenses and losses, credit all income and gains. So basically, first thing we need to understand is what is personal account. So personal account are those that have anything to do with the financial records of people. So here you heard the term people and organization or businesses. So the individual accounts can be divided into three groups. So in personal account there are three groups. One is the natural persons account, the second one is the artificial persons account, and the third one is the representative personal account. So in natural personal account, the individual account of the natural persons like Akhil, Rajesh and Sohan. So here you will have the name of the person to pass the journal entries. So you have to understand that it comes under the personal account. So the second one is the artificial personal account. So in this you will get the name of the company, name of the firm. For example, Reliance Industry, Lions Club, Mrs. Sham and Sons. So here you need to read the entry and need to understand that this comes under the personal account. And so the third one is the representative personal account. For example, wage, outstanding, prepaid expenses, like that. So the next thing we need to learn is the real account. So in real account represent the asset, properties. These include tangible and also the intangible asset. So real account include building, plant, machinery, cash, furniture, trademarks, copyrights, franchises, and patents. So this comes all under the real account. So the third one is the nominal account. So in nominal account, we need to debit all the expenses and losses and credit all the income and gains. So nominal account include the income, expenses, losses, gain. For example, wages, as you gain the wages, as you paid the rent, as you paid the salary to your workers. So this all comes under the nominal account. So here you can see the modern rules of accounting, the modern rules of credit and debit. This is the same thing but in a easy form. It is in a table form. So here, as you can see, here is the drawing expense, assets, liability, equity and revenue. So here you can see that if the can take a note on this table, so it will be easier for you to pass the journal entries. So let's get start with the question. Okay, so to start with the first journal entry, so here you can read the first entry, that will be April 1st. So Vishal brothers started business with cash 1 lakh rupees. So in this entry we can see that the cash is coming inside the business as capital. So to pass the journal entry, we need to first check the modern rule of debit. So here cash is an asset. So the asset, so to pass the journal entry, we need to of starting. Here's the format of journal. So it contains date, particulars, left, debit, credit. So here is the question. So the first question is 2021 April 1st, Vishal Brothers started business with cash. So basically the cash is coming inside the business. So the transaction will be, so let's write the date first. April 1st, cash account debtor to capital account. So here is the note, being business commenced with cash and the amount is 1 lakh. So we'll write 1 lakh on the debit side and we'll write 1 lakh on the credit side. Okay, so the next transaction is April 2nd, purchase goods for cash. So in this transaction, as you can see, goods are being purchased, so it is an expense. So the expense, if the expense is increasing, we'll debit it, and if the expenses are decreasing, we'll credit it. So here the expense is increasing, so we will debit it. So to debit the expense, we'll first write April 2nd, purchase account debtor to cash account, because the cash is going outside the business. So the amount is 40,000. Write it on both the sides. And a note, being goods purchased for cash. Okay, so the third transaction is purchase goods from Amit on credit. So here the goods are being purchased on credit, which means the amount will be paid later. So to for this entry we need to first write the date, purchase account debtor to Amit account, and the amount is 20,000. And write a note, being goods purchased from Amit on cash. So the fourth transaction is purchase goods from Amit. So here it is the same transaction, it's just that it is not on credit. Okay, so purchase account debtor to Amit account, and the amount is 10,000. So the next transaction is purchase furniture from cash. So basically, furniture is an asset. So if the asset is increasing, we need to debit it, and if the asset is decreasing, we need to credit it. So it involves two account. One is the furniture account and the other is the cash account. So furniture is coming inside the business and the cash is going outside the business. So we need to debit the furniture and credit the cash. Furniture account data to cash account, and the amount is 50,000. Being furniture purchased. So the next transaction is cash paid to Amit. So the company is paying cash to Amit, which is 20,000. So basically, it comes under the nominal account, and the rule for the nominal account is debit what comes in, credit what goes out. So the cash is going outside the business. So Amit account debtor to cash account. So the cash is going outside the business, so we need to credit it, and the amount is 20,000. Okay, so the next transaction is sold goods for cash. So we are selling goods for cash. So cash is coming inside the business. So it comes under the revenue. So revenue comes under the credit side, which means if the revenue is increasing, we need to credit it, and if the revenue is decreasing, we need to debit it. So sold good for cash. Cash is coming inside the business, so we need to debit the cash account data to sales account, and the amount is 5,000. Being goods sold for cash.